there. My name is Vahan Ajamian. I'm Capital Markets Advisor at High Tide Inc. Thank you so much for your interest in High Tide on this wonderful conference that we've been invited to. So just a quick step back. High Tide is a leading Canadian cannabis retailer. And Canadian cannabis has now been legal across the country now for about 4.5 years. And during this entire time and prior to it, there was a lot of discussion, there was a lot of promises made, a lot of predictions on how the market would shape out. And what we've seen now is it's a very difficult market. And a lot of the promises that were made several years ago have not come out to fruition. We've seen a lot of companies now 4.5 years in that still don't make any money, despite the fact that it's a very large industry. And it can be a very successful industry for a very select few, including High Tide, which have been nimble enough to grow and grow smartly, as well as operational excellence, which has allowed us to have EBITDA positive results for the last 12 quarters. There's been a lot of discussions and there's been a lot of promises, but if you look at pure execution, we would put ourselves up there with any other company in Canadian cannabis. Really quickly on a snapshot on High Tide, company's shares have been public since December 2018. They currently trade on the NASDAQ and on the TSX Venture. Market cap is about 130 million, which compares to our last quarter, which is the January quarter, where we reported $118 million of revenue for the quarter alone. This puts us at a run rate annually of over $470 million, which makes us the largest Canadian cannabis company by cannabis revenue. As a retailer, despite the fact that our market cap is significantly less than some of the licensed producers. One thing to note is we actually have the highest cannabis revenue of any company in Canada. Our EBITDA last quarter was $5.5 million. As mentioned, it's been positive now for 12 straight quarters. The company has a few different parts. First part and most important is the retail cannabis. So our flagship brand, Canna Cabana, we own, these are all corporate owned stores, 151 stores across the country, primarily in Ontario, Manitoba, Saskatchewan, Alberta, and British Columbia. Makes us the largest non-franchised cannabis retail chain. We have 975,000 members of our loyalty plan, which according to Health Canada's annual survey suggests that 14% of all cannabis users across the country, excluding Quebec, where cannabis retail is Crown Corporation owned, it's public sector, so we cannot play. 14% of cannabis users across the country outside Quebec are members of our loyalty plan, by far the highest among any such plans that our competitors have. This segment, the THC segment in Canada, represents about 85% of our revenue, and it's the by far the core business of High Tide. We do have two other segments, the CBD business. In 2021, we acquired 3 CBD companies. In the United States, we acquired 80% of New Leaf Naturals, which has operations in Denver, Colorado, and a CGMP facility. We also acquired 80% of Fab CBD based in Wisconsin. We are currently in the process of amalgamating the back offices and streamlining operations among our 2 US CBD brands. And we acquired 80% of Blessed CBD also in 2021. Blessed is a leading UK brand for CBD, and we've since taken that organically to Germany. Now, accessories is where the company has really begun. I've been in business since 2009 in this accessories business. Our founder and CEO, Raj Grover, started the business as one accessory shop with $48,000 of his own money. This grew to 19 stores across the country, and eventually to it becoming a cannabis company when it became legalized across the country in Canada. We still have accessories as a big part of our business. Our portfolio includes 2 of the most popular accessories e-commerce platforms, which are Grass City, which was acquired in 2018, and in 2021 we acquired Smoke Cartel. These 2 platforms for online sale of consumption accessories are the 2 highest in the world in terms of overall traffic. We also own Daily High Club and Dankstop, which are other e-commerce platforms for consumption accessories. take a step to look at our unbeatable record of positive results. The company several years ago had an annual revenue run rate of about $8 million. Today, as you can see, every single quarter, it's increased very, very steadily. And now last quarter, as mentioned, our results were revenue $118 million. Similarly on the EBITDA front, we've had 12 consecutive quarters of positive EBITDA. It's been trending quite nicely the last several quarters. Last quarter was $5.5 million of adjusted EBITDA. Now, as you can see, over the last several years, we know how to grow at High Tide. In the last 2 years, our store count has gone from about 60, 65 to currently 151. The last 2 years were definitely part of the land grab in cannabis, and we did our part, knowing when to grow, knowing how to grow to generate these types of charts in terms of store count, in terms of revenue, in terms of adjusted EBITDA, knowing that we weren't just going for the sake of growth, but we were doing it profitably from an adjusted EBITDA perspective. We've since communicated to the market that we're taking a deceleration in our growth. Last year we put up about 45 stores in the calendar 2022. That's not going to be the plan for calendar 2023. It'll be significantly lower. There's still some leases that we will, in really good locations, that we will open up. However, we will not match the level of growth that we had before. Our focus now that we've built this unbelievable platform across the country of 151 stores, our focus is to hone in our operations and make sure we're among one of the first few Canadian cannabis companies to be free cash flow positive. Now, in this quarter that we just reported, Q1 2023, which ended January 31st, 2023, free cash flow was already negative $2.3 million, which was a huge improvement from the previous January, where it was negative $63 million. So more than half of the free cash flow loss has been eliminated. The focus for this year, we've communicated to the market, is to make sure we are free cash flow positive by the end of this calendar year. And that'll be done by a combination of ways. Number one is decreasing the store count that's added during the year, so that it's less of a drag in terms of capital expenditures, in terms of working capital investments, as well as making sure the back office is streamlined. A lot of the especially online platforms that we acquired in 2021 still run different systems. We're going to be spending significant time and effort this year to optimize those, to make sure they're more efficient and more lucrative for shareholders. As well, we're going to be looking at honing in our operations, making sure our gross margins can increase to the extent that the market will allow, as well as our general overhead, say SG&A expenses. Now, as mentioned, years into legalization now, we're about 4.5 years in Canada. Many cannabis companies, the vast majority, are plagued with goodwill impairments, with negative EBITDA, especially on the licensed producer side, with facilities that have spent hundreds of millions of dollars building and have had to close. We generally haven't had that problem in retail. We have some other dynamics regarding competition, but we would say retail is a totally separate asset class in the licensed producers. And within the retailers in Canada, I think it's pretty clear we're the undisputed market leader in terms of revenue, in terms of EBITDA, in terms of market share, and that's due to our team. We have a team that's been doing this, serving cannabis consumers for over a decade. We know what consumers want. We know how to get the best real estate, and we go out and we execute every single day at High Tide. Now, we are Canada's largest non-franchise cannabis retail network. One thing that makes our store stand out is when you walk into our store, it's a bright, inviting atmosphere. For example, now these images are blurred in our presentation for regulatory reasons, but when you walk into our store, you can see our products. They're fully available. You can see them. You can ask questions with the bartender regarding the attributes. They can help guide you to the type of experience that you're looking for. And the walls are all surrounded by accessories. And these are, for the most part, our accessories, because the company has been involved in accessories for over a decade. We have thousands of SKUs that we design, manufacture, import into Canada and the United States, retail and wholesale. So when you walk in, as opposed to other stores where customer comes in, all you see is 2 or 3 TV screens, and it's a bunch of strain names and some numbers, whether it be prices or THC content, you can actually come in and try to get a better sense of the look and feel of cannabis, as well as accessories, where generally speaking, it's about 1% of sales for across the country, whereas accessories for us, given our proprietary accessories and the fact that it's been in our DNA for over a decade, accessories are about 4 to 5% of sales within our four walls. In terms of our footprint, as mentioned, we have 151 stores across the country. The widest footprint is in Alberta, 75 stores. And Ontario is our second largest market, where we have 49. In October 2021, Canna Cabana launched North America's first of its kind cannabis disc club model. So when customers walk in, they see two different prices. They see the market price. This is the price where cannabis will be sold at our competitors, and a member price, which is usually 20, 25% significantly lower than the market price. But in order to get the member price, you have to be a member. And it is free to be a member. You have to sign up giving your phone number and your email, and then we can be in touch with you to send you fully compliant offers, communications, etc. And what we found is over 90% now of our sales come from our members. Our membership has exploded to 975,000 across the country, which again is 14% of cannabis consumers outside of Quebec. And they come for a few different reasons. Probably most importantly is our unbeatable prices. And we have price matching, and you have to be a member to get the member price. But however, the fact is we have accessories where we can offer significantly steeper discounts, often 70, 80%, because there are accessories. There is no middleman. We've designed, manufactured, imported, and retail them. So we can offer significantly lower prices on accessories. Customers come in, they buy the accessories, they see the member market price dynamics, they sign up, they see the price that they save on cannabis, they get the text messages and the emails, and it generates a loyalty loop for our customers. As well, we have our own white label products, which we'll get to in a second, where again, you can only acquire these, for the most part, only acquire these products at our stores, and there's a little bit more loyalty that's built in when you acquire our white label products. Now, how can we tell how we've been doing over the past year and a half since the discount club model launched? Well, one thing we do every month is we compare our same store sales for that month versus the national increase in total sales, including the impact of adding new stores. And so that's shown in the graph here. As you can see, our same store sales alone have significantly outperformed the broader cannabis market outside of Quebec, even including the impact of new stores. To be specific, in the last almost year and a half, our same store sales, if we chain them monthly, are up almost double where they were back in October 2021 when our fiscal year ended and we launched a discount club model. Whereas in contrast, if you look at total retail sales across the country, excluding Quebec, it's only up about 14%. And during this time frame, the store count has increased by about 35%, which tells you that the average store across the country is significantly negative over this time in terms of sales trajectory, where our same store sales have almost doubled. Huge, huge outperformance. I think it's very clear that customers are finding our offering very compelling and keep coming back. As well, looking at another way, store economics. In Alberta, where we have the most number of stores, our average store does about $2 million of annual sales, which is double the peers in Alberta. In Ontario, where the dynamics are a little bit different and the market is obviously significantly larger, our Canna Cabana stores do almost 3.5 times the revenue that our peers generate in Ontario. Significant outperformance. And when you put all this together in terms of store count that has increased over the past 2 years and same store sales that continue to outpace national averages, you look at our Canna Cabana national market share, again, excluding Quebec, where there is no private retail, you can see since late 2021, it has steadily increased effectively every single month to the point where it's risen about 1% a quarter for the past 5 quarters. And if you look at the last quarter, we just reported January 2023, we're now averaging over 9%. One thing we introduced late last year but a year after discount club model is Elite. Elite is the next evolution of it. It's a paid membership where customers pay a price of $60 a year, but for the first year, given inflationary times and to make sure we maximize the number of signups, it's offered at a 50% discount to $30 a year or $2.50 a month. Now, Elite members, they get access to even more exclusive pricing on our white label products, on flash sales for specific products, on specific limited edition accessories, on more promotions and giveaways where allowable by regulations. And we're very happy with the first few months of Elite. Customers are recognizing the value offering, and we'll be offering more and more SKUs within our stores towards being Elite only, which we think will help accelerate adoption of Elite, which will offer two things. On the customer side, it'll further cement the loyalty loop, because if I'm paying money to shop at a certain retailer, well, the odds that I'm going to shop anywhere else go down significantly. As well as for our shareholders, Elite, as it builds up, should offer a recurring high margin revenue opportunity, which shareholders should benefit from. As well, we have our own white label products. Cabana Cannabis Co. Is our brand. We've launched over 10 SKUs now across the country in certain markets. We've also taken New Leaf, which is our CBD brand in the United States, and ported that brand to Canada through partnerships with licensed producers. So now we have white label offerings across THC, CBD, and consumption accessory products. Again, this is something that is just relatively new in terms of when we launched it. We believe in the next few years we can get it up to 25% of all in-store offerings. And we think there's two benefits here. First is more customer loyalty as they gravitate to our brand and have them be the brand of choice. And second, for shareholders, being our brands, we expect to generate 5 to 7% increased gross margins by having the products that we sell our brands under our white label platforms. Another aspect we should talk about is Fast Tender. Fast Tender was acquired in February 2022. It is a technology of kiosks and lockers. We're dealing with the kiosks first. There are also 4.5 years into legalization. There are all sorts of customers. There are customers that walk in, want to ask questions with the bud tender, see what's trending, what they recommend. And there are other customers that frankly know exactly what they want. And we want to make sure that we offer a different platform for customers to make sure it's a seamless experience. They walk in, you see the kiosk on the wall, you punch in your order, it spits out the receipt, and then you go pick it up. This is something revolutionary in Canadian cannabis. No one else has a platform like this that we are aware of. And we've installed it now in over 120 of our stores across the country. We're seeing very good take-up from customers. We're seeing positive responses from bud tenders as they can now focus on fulfilling orders and assisting customers that want assistance, as opposed to those who know exactly what they want and are in a time crunch to get it as quickly as possible. This technology, we've already had inbounds in the United States for offering there in terms of licensing. The plan is to make sure we outfit our stores first. And by the end of the year, we plan to enter into license agreements for cannabis operators in the United States who would like to license our technology, which again should provide a very high margin revenue stream for shareholders. Digging into some of the other aspects of the company other than just the brick and mortar, New Leaf, America's premier cannabinoid company. Again, we bought 80% of it in November 2021. They have a CGMP certified facility in Denver. The vast majority of their products are sold direct to consumer. And we did port this brand into Canada late last year. Fab CBD, another one of our brands in the US. Bless CBD, as mentioned, is our UK brand of CBD. We've since taken it organically into Germany. Now, on the consumption accessory side, Grass City, as mentioned, was acquired by High Tide in 2018. We had a situation where it's based in Amsterdam, but we saw that the vast majority of orders was being ordered from customers in the United States. So we acquired the company, set up a new distribution warehouse in Las Vegas to make sure we could fulfill those orders from Vegas with significantly shorter shipping times and lower shipping costs. And we've seen a significant increase, approximately triple of revenue at Grass City since it's been acquired. Simultaneously, when we acquired Grass City, only about 2% of the products that they sold were our High Tide accessories. Now that we own the platform, it's about over 50% of the products that they sell are our accessories. So you can see the synergies between having our own brands of accessories and having our own platforms where we can offer them to customers. Smoke Cartel is the world's most popular online consumption accessories platform by traffic as of 2022. Again, we acquired it in 2021. This one's a little bit different in that, unlike Grass City, which has a warehouse and holds inventory, Smoke Cartel is completely drop shipping. They don't own any inventory. They simply offer other manufacturers and vendors inventory. That way you can run it as a very inventory light model. Has over 965,000 customers to date, and it was one of the public companies that High Tide has acquired. Again, in March 2021, we've seen sales increase significantly since they've joined the High Tide family. Daily High Club, again, it's a accessories online platform. What's unique about this one is they have a subscription box service. So we have 11,000 monthly subscribers. They pay every month, and they receive a different box of accessories shipped to them every single month. It's very unique offering, and we've taken the technology of the monthly subscription service and since ported it to our CBD companies. For example, Fab and New Leaf, as well as Blessed, where we offer this subscription plan for customers. Dankstop was acquired by High Tide in August 2021. It is another smaller online consumption accessories platform based in the United States. Valiant Distribution is High Tide's North American distribution arm. We have a distribution business in the United States where we supply our accessories to retailers. We don't really do that in Canada, given the demand for our accessories and the fact that we want to be able to make sure our stores are sufficiently supplied with our own accessories for customers. But you can see some of our brands, famous brands, Puff Puff Pass, Vodka Glass, etc. We have a catalog of over 5,000 SKUs of accessories, approximately 80% of which are our accessories. We design them and have them manufactured overseas and import them. In terms of what to look forward to for High Tide, there's definitely a lot of catalysts here for the company. First is store growth. Now we're decelerating that compared to prior years, but we do have several leases that we're building out in really good areas. I can see on the real estate front, our model is to anchor ourselves with top tier tenants and top tier landlords. For example, being next to Costco's, LCBOs, Walmart's, grocery stores, such that you're pulling in customers from about 5-10 kilometer radius, as opposed to, especially in Toronto, having 3 cannabis stores on one block where you're sort of competing for one block of customers. And while we are taking a deceleration of store growth, our long-term target is to get to 250 stores across the country. And we have put acquisitions on hold for now, but once market conditions recover, we plan to continue our acquisitions. Other potential catalysts the company is expecting are improvements in our margins from the white label program and from the uptake of Elite, as well as synergies within our US CBD offerings, Fab and New Leaf. The longer term potential catalysts for us include US federal legalization. We have millions of customers in the United States. They buy cannabis, they buy accessories. They are customers of ours online. They're either through the accessory side or the CBD side. And we reach out to them regularly to make sure we stay in touch. We know where they live. They live across all 50 states. Once we get the green light from the regulatory or exchange perspective to offer them cannabis, we plan to do that and to supplement that with brick and mortar stores. Similarly, in Germany, we have a LOI signed with Sandy Group, which is one of the largest, most well-capitalized players in the German market. And we plan to leverage each other's strengths when legalization happens. We expect a bill shortly in the German parliament and for cannabis sales to start in Germany in late 2024. This is our management team and our cap table. Thank you very much for your interest in High Tide, and we're happy to take any questions. You can email us at ir@hightideinc.com.